The word Bitcoin today is known even by toddlers. People brandish this word without in-depth knowledge of what Bitcoin truly means. The general understanding is that Bitcoin is crypto or cryptocurrency. But do you even know the foundational principle of Bitcoin, cryptography, and the problems Bitcoin set out to address? This episode introduces the term Bitcoin from a research academic perspective, while keeping the discussion simple for everyone with a 9th grade education to understand. After listening to this topic, you will understand the concept and principles of Bitcoin. The founder of Bitcoin stated that he wanted to create a decentralized payment system without government control or supervision, solely depend on peer-to-peer electronic cash system. Do you know what peer-to-peer electronic cash decentralized payment system mean? We discussed the following questions. Who created Bitcoin? Why was Bitcoin created, and has it served its purpose? Does Bitcoin have a future, or with government regulations stifling Bitcoin's growth or ban it from being used? Is Bitcoin a valuable asset? Lastly, we discussed the market and price potential of Bitcoin. As is customary to live in finance, we try to educate through social engagement and reason dissemination. To better understand the topic, let's start with the ideas and principles underlying the concept of Bitcoin. Welcome to Living Finance. Take a seat, grab a drink, and let's reason together. Listen to the end to get the benefit of this broadcast. Hello everyone, and welcome to Living Finance. This platform presents a reason analysis in finance, the economy, crypto, stock market, electric vehicles, artificial intelligence, healthcare, and how policies in these sectors affect personal finances. Please subscribe, share, and turn on the notification button. Why was Bitcoin created, and who is the creator of Bitcoin? Fact number 1. Satoshi Nakamoto created Bitcoin. Now let's start with the concept of Bitcoin, beginning with the excerpt of the first known publication by the creator of Bitcoin, Satoshi Nakamoto. It is imperative to know that we do not have a face to this name. We do not know if this is a pseudonym. The creator of Bitcoin remains elusive. Given the above, it is worthy to note that the name of the creator of Bitcoin is Satoshi Nakamoto. In his or her first public message, he stated that the internet has come to rely almost exclusively on financial institutions serving as trusted third parties to process electronic payments. While the system works well enough for most transactions, it still suffers from the inherent weaknesses of trust-based model. He identified the issues of a centralized payment system controlled by third party as a weakness to transaction with inherent transaction cost that requires validation by third party that is not party to the transaction. Why can't transactions be directly executed by parties and validated by a decentralized system, he asked. Satoshi wanted to create a payment system that did away with third-party validations to reduce transaction cost and processing time. He created an electronic payment system based on cryptography that allows individuals to transact directly without needing a third party or centralized authority to validate the transaction. Bitcoin created a decentralized payment system that deviated from the norm centralized payment system, requiring third-party validation. Let's call this third party the banks, central banks, payment processing companies such as PayPal, Square, Venmo, and Cash App. Fact number 2. Bitcoin's underlying technology is cryptographic decentralized blockchain. According to Satoshi, an electronic payment system based on cryptographic proof instead of trust, allowing two willing parties to transact directly with each other without the need for a trusted third party was needed. He noted that a peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Bitcoin decentralized cryptography desires to eliminate financial institutions. The legal question is whether Bitcoin and other cryptos are cash. The acceptable logic is that money is a social construct. So is Bitcoin electronic cash or money? Although Bitcoin is neither a coin nor money as defined under US laws, so merchants and individuals accept it as a means of payment. Crypto is not a currency in the legal sense. To further understand cryptos and the concept of money, watch our video on cryptocurrency scams in a nutshell. Bitcoin, unlike most of the cryptos, cryptocurrency or crypto coins, no matter what you call them, was designed to solve a problem. Some spin-offs resulted from the concept of the underlying principle of Bitcoin, but they became rug pulls. Most of the cryptos traded today provide no fundamental utilities. They neither solve a problem nor provide solutions. It will be best to research and ask salient questions before investing in crypto. Consult a licensed investment advisor before making investment decisions. Now let's address the purpose of Bitcoin. What purpose does or was Bitcoin meant to serve? According to Bitcoin's developer, the heart of Bitcoin's concept is to protect sellers and buyers from fraud by making transactions computationally impracticable to reverse. Bitcoin provides a platform for individuals peer-to-peer to transact without the help or need of an intermediary. The platform uses Bitcoin as cash or currency in the transaction throughout the decentralized network. Does Bitcoin have a future? Will government regulations stifle Bitcoin's growth or ban it from being used? We are going to address these questions in the next section. The future of Bitcoin is dependent on several factors. The most threatening is the extent of different governments' regulation of cryptocurrencies and their effect on Bitcoin. Some countries like China, Algeria, Nigeria, Egypt, Qatar, and the Dominican Republic have banned the trading of Bitcoin and other cryptos in their country. Bitcoin and other cryptocurrencies are not considered legal tender in the United States, Australia, Germany, and the United Kingdom. However, in these countries, they are traded on different platforms. While some countries have outlawed the use and trading of cryptocurrencies, others by definition have distinguished the use, trade, and investment in cryptos as an asset class or property. Now let's look at the fundamentals of Bitcoin. Remember, this is not an investment advice. Please do not rely on it to make any investment decision. It is doubtful if sovereign states will accept Bitcoin and other cryptos as currencies because they lack the sovereign backing. Also, they are decentralized and considered a volatile financial product without underlying assets capable of causing economic harm to investors, according to Bitcoin critics. Nonetheless, there are gradual acceptance by some states to allow the trading of crypto as an asset with a tax proposition to classify it as a property for taxation purposes. Whether this concept succeeds remains to be seen. Unfavorable legislation and regulation are likely to impact the value of Bitcoin. At the same time, the adoption and classification of Bitcoin as a financial instrument or virtual currency may improve its value proposition. Is Bitcoin a valuable asset? The concept of Bitcoin as an asset is relative to the individual. Whether Bitcoin is a property or possession remains to be clearly defined. However, it is accepted amongst the crypto community that Bitcoin is a virtual currency with immense potential to disrupt the global payment system. Some crypto maximalists believe that Bitcoin has the potential to replace gold as a valuable asset because of its finite supply. Now, let's look at the fundamentals of Bitcoin based on price, supply, and quantity projections. 1. The price of Bitcoin may continue to rise if its growth is not impaired by strict financial regulations or banned by countries that presently allow its trade and usage. The supply of Bitcoin is limited, unlike most crypto spin-offs. It will become scarce when the total available units are in full circulation. Bitcoin has a finite supply, and the price of Bitcoin is projected to surpass $100,000 per Bitcoin. Some analysts believe that Bitcoin will exceed $100,000 figure. It is logical to state that everything that has the potential to go up has the probability of coming down too. While the projection is that it will rise in value, it is also possible to fall too. This is not an information that should be taken as an investment advice. You must consult an investment advisor before making an investment decision. Number 2. The maximum unit of Bitcoin that will ever be in circulation is 21 million Bitcoins. Once 21 million Bitcoin is mined and in circulation, there will be no more Bitcoin mined. The current supply of Bitcoin in circulation, according to CoinMarketCap, is 18,990,906 Bitcoins. We have less than 2.1 million Bitcoin to get to the maximum supply of Bitcoin. Here is some information to take away. Bitcoin is an emerging decentralized payment system. Bitcoin is created with a cryptographic algorithm using blockchain technology. It is a novel concept with disruptive potential. In investing, you must understand that this sector is yet to be entirely accepted by most sovereign states. They neither consider it as currency nor a financial instrument. Hence, it will be best if you approach this area with caution. However, some states allow its trade and usage, while some designate it as digital asset for taxation purposes. It would be helpful if you looked at investing in crypto with caution. It would be best if you never forgot to ask questions. What is the value proposition of Bitcoin? Do you think it has the capacity for broader adoption? Let us know. The critics of Bitcoin and cryptocurrencies argue that it provides an avenue for criminals to launder ill-gotten wealth without going through a centralized financial system controlled by third parties regulated by states. They say that its decentralized blockchain technology and payment systems present security concerns because of their very nature. They consider cryptocurrencies as disruptive tools which may enable organized criminal enterprise. Do you agree? Do you believe? Let us know in the comment section what you think. If you are a crypto enthusiast, do you know or understand the value proposition of the coins or memes you invested in? If you are invested in NFT, do you understand what NFT is? Why do you think it's a good idea to invest in NFT? How did you decide to invest if you invested in a virtual real estate or metaverse? Were you moved by the marketing hype or buying into the market confidence? There is no doubt that the future of technology, innovation, and market disruption is here. However, you must ensure to ask questions and understand whatever you invest in. Above all, you must protect your savings and income. Ask questions until you find answers. Be driven by facts, not sentiments and emotions. Although an argument can be made of the gradual adoption of cryptos by some states as a means of exchange, however, they are not currency by the strict definition of the term. Crypto is not a fiat currency issued by a state. It is essential to know that cryptos are not backed by any government treasury, unlike currencies issued by a sovereign state. They are not backed by any known underlying asset class that secures the value of a crypto token, unlike stocks and bonds that have underlying assets. As a result, cryptos may go to zero. You may lose all your money, so be informed before you dive into the highly volatile crypto market. You need to research before making any investment decision or any decision to invest. A single government policy can send the price of cryptos down, and a single regulation can stop the acceptability of cryptos in any form within a given jurisdiction. You must consider this inherent risk before deciding to invest in crypto. Lastly, most cryptos without utilities and value proposition will fail. Do you remember the dot-com bubble? Yes, there will be many failed crypto tokens, coins, and memes that are rug pulls. Time will tell whether Bitcoin will succeed or fail. However, Bitcoin remains the standard reference to crypto cash, tokens, or cryptocurrencies, whatever you prefer to call them. Thank you for listening, and please remember to subscribe, share, and turn on the notification button. Let us know what you think in the comment section below. We wanted to know the topics you would like us to discuss. Thank you once more. Remember, the information contained in this broadcast is not investment advice. Please do not rely on it to make any financial or investment decision. Consult a licensed investment advisor before making any investment decision. Thank you.